Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Monday, March the 5th, 2012. Well, a change of trend today, and here we have a candle with a lower high and a lower low. Previously the market was trending up. We had prior to this an inside day, an outside day, an inside day, another inside day, an outside day, and the trend was up prior to that. So today, confirmation of a change of trend to the downside, with the current candle making lower high and lower low. We have a black-bodied candle, so that denotes the sellers making net bearish progress in a similar manner to the previous day's trading. And we have a larger shadow on the bottom of this candle. That represents the market finding support down around the 1359 area. An area that we highlighted previously as an area of support, and it shows that the sellers lost commitment down around that area. The buyers, however, weren't strong enough to close the market up above the midpoint level, and the midpoint level tells us that neither side has closed with control of this market. So that does raise some doubt about continuation of the trend to the downside, but by the same token, the bulls or the buyers are really not showing any strength in this market. Now this 1359 area around the low looms as a very important area of support for the market. If we do have continuation of the trend to the downside, we do have a zone of support extending down to 1352, but then down below there we don't have support until we trade down to 1344. In terms of Ichimoku, the market is bullish in the long-term time frame by trending above the cloud, in the medium-term time frame by trending above the Kijun-sen, but just bearish in the fast-term time frame by trading below the green line here, the Tenkan-sen. And the close was very close to the Tenkan-sen, to where the Tenkan-sen is trading at. So technically bearish, but pretty much neutral in that fast-term time frame. If we do see a change of trend to the upside, then we do have solid resistance at 1370, and then up to around the 1380 level, roughly about the 1378 level for this swing high. Above there isn't any solid resistance until the market trades up to the round number 1400. So for the next day's trading, the 1359 area looms as a very important level, considering the rejection that we've had to the upside down around these levels. But certainly 1370 is also an important area of resistance. Next, moving to gold, and here we see a downtrend in the market, a candle that's made a lower high and a lower low relative to the previous day's trading. A spinning top type candle that denotes indecision, but a black body candle, so the sellers made net bearish progress, which means that to a degree they did support the trend to the downside, but they failed to close substantially below the midpoint level. So the sellers have taken control of this market, but very, very weak control. We see the shadow on the bottom of the candle as the market tested around the 1700 level, and that represented the sellers losing commitment as they traded down around that level, and it coincides roughly with the lows of the previous couple of days. We do have solid support down below there at 1683, and then down to the cloud, which is trading around 1660. Below there, solid support at 1651. If we do see a change of trend to the upside, and there is potential for that because of this indecisive type trading that we have at the moment for the previous two candles, then there is resistance at 1723. And above there, potential resistance at the Kijun-sen and Tenkan-sen at 1740. In terms of Ichimoku, the market remains bullish in the long-term time frame, but bearish in the fast-term time frame and the medium-term time frame by trading below the Kijun-sen and the Tenkan-sen. And the Kijun-sen is pointing flat, so there is a possibility that we could see the market attempt to trade back up to that level. So that makes the 1723 level very important for the next day's trading. And as I've said, if we do see the market test above there, then the area at 1740, where these two indicators are trading, should hold as fairly strong resistance for this market. So we do need to watch the high of the current candle and around 1723 for tomorrow's trading, but certainly still watch down around the low 1694 and around 1683 for a potential continuation of the trend to the downside. Next, moving to light sweet crude oil, and for today's trading we see a continuation of the trend to the downside. Previous day's trading, we had the establishment of a downtrend in the first time frame with the candle making a lower high and a lower low. It was a bearish candle, a fairly large black body to this candle. But with today's trading, we have a doji type candle, and this is where we have the open and the close roughly within the same area, and that denotes a market that's very indecisive. We have a larger shadow on the top and on the bottom, and the shadow on the top represents the buyers losing commitment up above this 106.95 level, but the sellers losing commitment down below the 106 level. So a battle going on between the bulls and the bears, and not resolved in a satisfactory manner throughout the trading day, although the buyers have closed with a moderate level of control of this market. Down below the region where the market was trading today, we also have very strong potential support down at the window that was open previously, and that's around the 104.50 level. In terms of Ichimoku, the market is trading above the cloud, so bullish in the long-term time frame, bullish in the medium-term time frame by trading above the Kijun-sen, and that's pointing flat, and we're seeing price action being attracted back towards there, and that will happen as long as that remains flat. It represents the market basically not trending and either pulling back or congesting with reference to the previous uptrend. And the market remains trading down below the Tenkan-sen. Previous day's trading, we saw the market close down below the Tenkan-sen, and today once again we've seen a close down below there, and it was some time before we saw the market trading down below the Tenkan-sen, and for the previous day's trading that established the bearish market in the fast term time frame. So there is potential for a change of trend to the upside. If we do see the market rally and take out the high of the current candle, then look to a higher high and a higher low. If the market does rally, then we should see some very solid resistance up around the 109.75 level, and then to the swing high at 110.50, and that will act as a zone of resistance. Up above there, there isn't any major resistance until we trade to higher levels. So a market that's has potential for a change of trend. Short-term dynamics not favouring the sellers at the moment, and potential for the market to trade up to 109.75.